So thank you, Jake. Thank you so much for once again giving us this opportunity. And as some guys must have seen the previous video, so it was a great video in which Jake had discussed about the raindrop charts, the volume shelf, and the seasonality. These main three topics were other kind of topics that I am sure 90% of the traders must not be aware of. So if you guys have not seen that part, the first part of this series, of this episodes, I will pin that video in the description and you can see that. So in that video, we have already covered the introduction also of Jake. So whoever have still not seen it, I prefer, I would suggest that you first watch that episode, the previous one. So this episode will make a bit more sense then. And yeah, Jake, whenever you are ready, you can just start. It's all up to you.
Okay, perfect. So, what I want to talk about a little bit today is kind of the broad markets looking at SPY. So let me go ahead and share my screen here. I think you need to enable screen sharing and I'll put it up.
Yes, I've made it
But
right now.
essentially, oh, there we go.
Yeah.
And so essentially, I want to talk a little bit about the broad markets, but I also want to talk about Bitcoin. I know Bitcoin's kind of a hot topic right now, and I want to kind of go over a couple interesting statistics standpoint, but a back testing standpoint. So the first thing that we'll touch on is SPY. And you guys will see here that I have these red circles here. And these red circles are a function of the upper monthly Bollinger Band. So if I turn on MTFA, that just allows me to overlay a longer term time frame on a shorter term chart. So we're looking at the daily chart and we want to look at the monthly Bollinger Band. So I can just turn on the Bollinger Bands here and you'll see the price action is starting to kind of get into that red zone again. So anytime that the price has really melted up through this upper Bollinger Band from the monthly chart, we
Right.
generally can melt up for quite a while, but you generally have some pretty sharp moves back down, kind of mean reversion type deal here. So, you know, late January, early February, we had a melt up. We had a pretty strong move down. It only lasted a couple days before we caught a bottom before moving up again. But then we also had the same thing again. We kind of bounced off the lower monthly band. We moved up and then we melted up once again, even higher than we were before. And you can see how far outside the monthly band we were. I mean, if we measure from here, at one point we were almost 4% above the upper monthly Bollinger Band. So that just tells us how overextended we were. And then we just had this absolute crash. Now, it also happened in August. We just melted straight up. And you can see here that essentially, let's see, what is that? I don't think we melted up as much as the first time. About 4%. Same thing. So we got about 4% above the monthly Bollinger Band. And we had a very, very sharp correction in late August and into September.
Right.
Same thing here. October, we didn't necessarily melt up as far, but we did close outside of the monthly bands and we did have another correction. Well, we're back here again. We are above the monthly Bollinger Band. Now, what's important to note is, one, this doesn't happen that often. And so the fact that this has happened 5 times this year is insane. If you look back in time, the last time this happened was in January, February of 2018. And this was actually something I was watching back then. It was like, ooh, this is weird. This doesn't happen often. And you can see same thing. We just melted right up. And then we just absolutely crashed for the next couple weeks. So this does have a pretty good track record of eventually, really mean reverting back to at least some point, whether that's an anchored VWAP, whether that's a moving average. But you can see every time we have melted up, generally we do have quite a correction. So that's something to keep in mind on the long side. The market is quite an interesting vehicle to just look at overall sentiment of the world, but also, the market based on how the world is in 2020, you would expect the market to be crashing, but it's not, because there's nowhere else to put your money. You can't put your money anywhere else to get a
Yeah.
return. You put in US bonds and you're going to get like point a fraction of a percent. So people are almost forced to put their money in the market to get some type of return. So that's why the market has just continued to move up, because there's nowhere else to put your money. Now, what I want to touch on here is the monthly candles as well. So I'm just going to turn on auto trends. So if I turn on, I'm going to take this off a log and just turn on trends. You'll see here that we have this clear broadening formation here, right? It's pretty close to nearing this resistance once again. And now this would be this would be the third time we've tested this after the initial starting point in September 2018. But what I want to focus on is these candles right here. There's 5 green candles in a row. 1, 2, 3, 4, 5.
Right.
That's some pretty strong bullishness. And a lot of people were saying, we've just gone up so much. There's no way we can keep going up. And what I want to do is I want to turn on the strategy tester and actually see how has the market done after we've had this type of run. So what I can do is I can go in. I'll just start this from scratch. I can go to the monthly chart. So we're back testing the monthly candle,
Okay.
add a parameter, and the condition is the monthly candlestick pattern, 5 green candles in a row. And what's the return after 12 months? So after 1 year, since this has happened in the past, what's the average return on the S&P 500? I would assume a lot of people think it's down. Well, if we go and test it out, we'll actually see that it's not. It's actually far from being down. The average return once we've had 5 green candles in a row is 12.18% after 12 more months have passed by. So you can see this on the chart. Anytime it's happened, we generally move up. So you can see here in the tabular data, 83% of the time, so 10 out of the 12 times this has happened over the last 28 years, we have moved up. And what's really cool about this is something called the Price Explorer. So you guys can see this cloud here. You've got this blue line, and then you've got this kind of cloud. The top of the cloud is the biggest move that has happened over these last 12 times it's happened. So it's essentially painting out the biggest move that's ever happened. So by doing that, we can see the current monthly candle is above that cloud. So we're actually performing the best that we've ever performed since this back test started. So you can see, relatively speaking, this current return since we entered in September of 2020, or since the system took the trade in 2020, we had 5 green candles. The system isn't going to take an entry until the next candle, because you can't take an entry until this candle is closed. So we take an entry on this candle, and you'll see, since the last 12 back tests, our current price action is actually outperforming the biggest move we've ever had. So you can see, if we continued at this approach, the next 12 months, we could be up in the 430s for SPY if it followed the same path as the biggest move previously. So this kind of gives us an idea of where we can go. So, I know you're in India, I'm in the US. We do hurricanes here. I think it's typhoons, in that part of the world. But there's something called I think they call it like a cone. And it tells you, like, if you're looking at a hurricane, it will say, okay, the hurricane is at this part of the ocean. And then it will take all of the historical data every time a hurricane has been in that same exact spot in the Atlantic Ocean, in my case, or Pacific Ocean, whatever.
Right.
It will tell you where the hurricane is likely going based on the past times hurricanes have been in this position. And that's
Right.
exactly what this is doing. Instead of your hurricane being in a specific area in the ocean, it's saying, all right, this is our entry after 5 candles, and we are now painting out every time that's happened in the past to get an idea of where price likely will trade within.
So once
So
you
it's
did the once you did the strategy tester, you had put the 5 candles, and after that, this price projection, this thing came by itself, or was it any other indicator?
No, it popped up on its own
Okay.
since we just took an entry here, since
Right.
we just had something happen, it's able to paint it on. Now, if we didn't have 5 green candles in a row that had happened anytime before, this wouldn't be painted out. It's essentially painting it out since we technically have 10 more months in this back
So
test.
it's actually very easy to see. It's actually just right out there.
Yep.
We don't have to do
And you can
anything,
see
but
it.
just to observe it.
Yeah, it's just a visual enhancement. So you can get an idea, relatively speaking, how is this particular entry doing compared to other times? And you can see, I mean, most times we've had this type of move in the market, you have a pretty nice continuation up. This type of move does not happen in bear markets. It happens in bull markets. So, there's a lot of people still bearish, which is also bullish because the more people that are bearish, the more the markets are likely going to go up.
Right.
But it is important to remember we are right at this resistance zone. So we could easily pull back. We could even fill a couple gaps in the 290s, and we could still, over the next 12 months, be pretty significantly up. So that's what we have to remember. These are monthly candles. We are at a very strong level of resistance here. We're going into kind of an uncertain time with the elections in the U.S. at least still not fully, figured out. Even though, some people think they are, but on each side, regardless, some people think Biden won and that's just it. Some people think this whole thing's rigged and Trump's going to win. I think politics suck in general, and I keep myself out of them. But
Right.
I just go with the price action. I don't care what the news is saying about who's winning. I care about what
Perfect.
the price is telling me.
Perfect.
And so in this case, what the price is telling me is that we're at this resistance level on this broadening formation. That's important to note for the bearish thesis, but it's also important to note on the bullish thesis that this price explorer is telling us that we generally are moving up after that type of pattern. So something to consider for those that are looking at the market in a shorter term time frame. Maybe you guys want to open it up a little on the longer term. I personally really don't like to look at anything less than the daily candle. I mean, even the daily candle is a pretty small time frame. I like to look at the weekly. I like to look at the monthly. When I'm trading, I'm not looking, if I want to really take advantage of a really sweet setup on the daily, I'm likely going to play an option. But if I'm looking at the longer term, weekly, monthly, I'm generally just going to play the common stock and go from there. Everyone has their own strategy. Some people may just play leaps as a long-term strategy. It's just up to how you trade and how you want you want to manage risk. But that's kind of the way to look at the market right now. Now, what I also want to do is I want to go to Bitcoin and use the same type of logic here, but I want to do it on the weekly chart. So let's go to the weekly chart. And you can see here that we have had 1, 2, 3, 4, 5, 6. This is the 7th green weekly chart, weekly candle in a row on this chart. That's some pretty extreme moves up. Now, what we want to do is let's say, let's go redo this back test. And let's do add parameter, condition, candlestick pattern. We'll do 6 green candles in a row. So let's change this to the weekly chart. So now we're looking at, over time, and let me change this on the weekly side as well. Over time, how has 6 green weeks in a row performed? And so we are testing this as a long position. So, as we enter, if we go up, we're profitable. If we change this to short, if the market kept going up, that would be a negative return because we'd be looking at this as a short position. But let's look at it as a long position. So what we're doing is we're saying, what is the return once 6 green candles have occurred? And let's add number of candles have passed. What's the return after, let's say, 12 weeks? So that's about 3 months. So we go and test this out, and we'll see, even though we've got 6 green candles in a row, within 12 weeks, Bitcoin on average goes up another 50%. So that is definitely something to consider with Bitcoin. Everyone's like, oh, Bitcoin has just gone straight up. Yeah, well, it's gone straight up a lot before. And on average, after this setup has occurred, Bitcoin goes up another 50%. Does that mean it's going to go up 50% in the next 12 weeks? No. We're just looking at this historical performance and getting an idea of what can happen. So let's click and see on chart, and you'll see anytime this has happened on the chart, we have a 100% win rate. So there has not been a time where Bitcoin has actually gone down after 12 weeks once we've formed 6 green candles in a row. And you can see that here. Every time, here's our entry after 6 green candles have formed, and our exit is simply 12 weeks later. So it says exit 22%. That means that it's exiting simply after 12 weeks have passed once we entered that position. And every single time, it has closed green. That is definitely something to keep in mind going into this current candle forming. So, you know, take it for what it's worth. It's really just a statistic and just overall data to look at. But that's a pretty strong return and a pretty strong win rate. 100% win rate. Average return is 50%. The biggest return that we ever had was let's see, biggest return was 107%. And that's after that was at the bottom though. So you have to keep in mind we are nearing all-time highs again. But either way, definitely just something to consider when you are looking at shorting Bitcoin or going long Bitcoin, that type of thing. So I really want to focus on this particular video was focused really on looking and back testing, because back testing is important. One, because it takes a long time to back test. If you wanted to do this manually, that's a lot of work that you have to do manually. So being able to just put this in the system and have it manually back test for you is really nice. Now, this is where the trading side comes in. Let's say that you see this and you're like, wow, 50% return. I want to get in this and trade it. Or you compare this to the performance chart. Since we started this back test 6 years ago, you could have traded this perfectly and been up 894% on your account. But if you would have just bought and held Bitcoin, you'd be up 8,500%. So this back tester is actually telling us, sure, you could have traded this perfectly, but you could have also just held Bitcoin and literally not looked at your account once, and you'd be up almost 10 times that amount. So the performance chart is something that's really important because it allows you to see, is my trading strategy beating buy and hold? And if it's not beating buy and hold, why would you trade it? One, especially on crypto, you have insane commissions. That's one reason why I refuse to trade crypto. I'm a believer in you can't trade everything. Pokemon cards are big right now. I've seen a bunch of people trading Pokemon cards. That doesn't mean that I'm going to go buy Pokemon cards and trade them because there's a way to make a return. I'm only trading what I know. I personally follow Bitcoin's action. I follow cryptocurrency action. But at the end of the day, I'm only trading what I know. I've been trading stocks since I was 12 years old. I'm going to focus on stocks. Even though Bitcoin seems like a great opportunity, I've dealt with the commissions on Coinbase and some of these other platforms, and they suck. And I just don't fully trust platforms yet. That could be me being ignorant. I don't know. But like with anything in trading or investing, trade in what you know. Don't trade because something's going up. Commercial real estate in the US is likely absolutely crashing. Does that mean that I'm going to go in and, does that mean I'm going to go in and short commercial real estate? No, because I don't know anything about it. 1 second, my dog's about to go crazy. Sirens are going off. The beauty of having a husky. Oh, hold on, sorry. But anyways, what I wanted to point out is don't trade something just because you want to trade it and because you have FOMO. Trade it because you understand it. You understand the technicals of it. You understand the fundamentals, and stick to that. Like I said, there's always going to be something that's trending, whether that's, Pokemon cards are up 300% this year. Who cares? I don't want to deal with Pokemon cards. I don't know anything about them. I was never really into it earlier in my life, maybe when I was like 5 and I thought they looked cool, like, and they were shiny, but that doesn't mean that I'm going to go trade them now. So just focus on what you know, focus on what you can back test, but also what you know. Like I said, I can back test Bitcoin and see that there's an opportunity here, but that doesn't mean that I'm going to go, do it, because one, it's 24/7. I am someone who is very intense. I'm generally watching the market pretty heavily. So I like to have my hours off. That's why I like the stock market, because the stock market opens at 7:30 my time and it closes at 2 p.m. And then it's done for the day. Nothing's going on in the background when I'm trying to watch a TV show, right? I do like to have my time off to kind of recalibrate my mind and my brain. So I know I went off on a little bit of a tangent there, but that's just one of the biggest things I see is people, they want to catch every single move, whether it's crypto, whether it's gold, silver, and it's you can't do it all. And that's unless you have an automated system trading for you, it's really not even good for your mental health to be trying to capture every single move in every single market, because then you're not living life. You're not just living, you're just focusing on, the next return. And at the end of the day, there's always going to be a return. I'm 28 years old. In 10 years, something else is going to be rocketing and I can take advantage of that, right? So
Right.
it's all about having just an overall quality of life. Being able to spend time with your family, being able to still trade, but really have that time for stuff that actually means something in life rather than just saying, oh, I made this much money. I know a lot of people that have made a lot of money in the markets and they're not the happiest people. So it's, do you want to just be like this machine, this robot that just cares about money, or you want to be able to kind of split up your family time, your free time, and still have success in the markets? And that's something I think is just as important as making money, is being able to separate those two and really enjoy life, because it doesn't last forever. So there's a lot of different things to go over. But today I really wanted to focus on Bitcoin. I wanted to focus on the broad markets, looking at how, SPY is outside of those monthly Bollinger Bands right now. Let's see how far we can melt up here. Remember, just because the price is above the Bollinger Bands doesn't necessarily mean that we can't go higher. Bollinger Bands are flexible. They can move with price. It's not like an RSI where you're above 80 and it starts getting sketchy. If you're above the monthly Bollinger Band, or if you're above a Bollinger Band, the Bollinger Band can just move with the price up. So that's something to keep in mind. But just based on my overall experience with this, anytime we've been in this particular area, we have had some interesting moves to the downside, at least for now. And this is where, Brian Shannon's one of my mentors using the Anchored View app. He would say,
Mhm.
well, go ahead and anchor a view app from this swing low. And then if we did pull back, this 347, 348 would be our target below. So using anchored view apps is something that's really important in looking at the markets as well. Even if we did pull back, you want to get an idea of where interest may come in for buyers and sellers. And using the anchored view app is definitely the way that I like to do that, rather than moving averages or something like that. Because with the anchored view app, you're using equilibrium price, you're using supply and demand. And at the end of the day, supply and demand rule. They move the market. People talk about, oh, news moves the market. No, news is the trigger for supply and demand to do their thing. You look at a stock and you can see a stock has good news every week and it's not moving up. And then finally, you have a news article that you think may not be that important that moves the market. That's because the supply and demand equation, the supply and demand forces at work for that particular asset you're looking at, were finally ready to move up based on supply and demand, not because a news article came out. It's this is an analogy that I've come up with a lot recently with volcanoes, right? Generally a volcano is triggered by an earthquake. So
Mhm.
think of the volcano as the asset you're looking at, and then the earthquake as your news events. There's earthquakes. If you guys are familiar with Yellowstone, Yellowstone is a super volcano. There's earthquakes all the time at Yellowstone, but Yellowstone isn't erupting because the forces below Yellowstone, all of the, the chamber and all that stuff below the volcano, all the gases, they're not ready for an explosion yet. But once those gases and everything are at the right, spot to have an explosion, that's when the earthquake is going to trigger the eruption. So it's the same thing with stocks. Your asset is your volcano. Your news events are all of those things going on below the volcano. And then finally, the earthquake is all those things below. And so finally, once the supply and demand equation is ready for that asset, that's when the news event is going to move the market. Not because, because there's an earthquake. There's earthquakes all the time in Yellowstone. It's when everything below Yellowstone is ready, that's when that earthquake is going to cause the eruption. Just like if you're looking at a stock, when all of the supply and demand forces are ready to make a move, that's when the news event is going to move the market. So a little physics in there for today, talking about supply and demand and comparing it to volcanoes. But that's kind of the best analogy I can think of. And that's the way I look at the markets, is really, markets move when supply and demand are ready for them to move. And yeah, I think, from this perspective, I don't want to make this video too long, because at the end of the day, we could talk about some interesting stuff all day, but at least myself, I have a pretty short attention span. And after X amount of time, I just am ready to turn something else on. So hopefully this is enough information for everybody to digest. And, hopefully it was valuable in learning a little more about using longer time frames, being able to back test and all that. And if you guys have any questions, just post a mention in the comments below, and I'm happy to answer it. But definitely, definitely put @TrendSpider, so I'm able to see that you guys posted something in the comments and I can answer it. But Harneet, always appreciate you letting me come on and discuss the markets, and hopefully this was helpful for those watching.
Definitely. Thank you so much. Thank you so much. Actually, you have already ready to come just on the first notice. You are always ready. And in fact, today's session was brilliant because we talked about the technical part, we talked about the strategy and the statistical part, and then the last part when you discussed about the life along with stocks. That was really fabulous because everybody just focuses on the technicals or the numbers. You actually talked about a very, very concerned, very major area which hardly anyone talks about. And this is actually, if at the end of the day, if you're not enjoying your life, then those numbers really don't matter. So it was really a great, great session. And just before we go, can you just apply the volume shelf over here in the S&P, and can we see? Because that is
Yeah.
definitely one step ahead.
If you don't mind, I'm going to do it on the monthly chart just
Right.
because we can get a better idea. So
Okay.
let's get rid of this. What I'm going to do is I'm going to do the auto trends again and just lock in these two lines. And what I want to do, sometimes this is something I like to do, is I like to start the volume profile, the volume shelf, from the start of a pattern. So at this point, if I put the volume by price starting here,
Okay.
we now can see what the volume profile is of this megaphone setup. So we can essentially say this is the volume profile of the megaphone, being able to say, start it from this point in time. So what I want to say is, from a bearish perspective, there's not a lot of volume supporting price up here at all. Very little volume. Most people have participated in the markets and are holding down in the 290s. So that means that a majority of the market is holding at around 22% gains in the last 2 years or so. So remember, when more people have profit, it's easier to sell because, it's easier for price to drop, because if everybody panics and decides to take profit at the same time, people are still going to be holding profit until we drop all the way back down to 290. So what we will do is we'll go on the daily chart and we'll look at some of the gaps below. So if I turn off the volume shelf, well, let's just turn on the volume shelf from the previous all-time highs. And we'll see here, even now, a majority of the volume is holding in the mid 330s. So there's definitely some profits that people are holding right now. And you've got another shelf here around 350. So not a ton of volume supporting price up here for now. If we have a couple big days, you could see a lot of volume start to aggregate here. But what I also want to do, and this is something that I did on before we melted down in February, March, was using the gap snake. So this allows me to see any gaps that are open in the price. So you can see here, there's a gap below here. There's an open gap here. There's an open gap here. And that's about it. All the other gaps have filled. So, there are some quite large gaps below. And let me turn on the session candle, because actually we probably will find a couple more gaps here. Yep, there's another gap here at 288. So you can see here, that's quite a ways down. I'm not saying we're going to go there, but it's just dumb not to look at gaps, because at the end of the day, gaps are targets to the upside. So if you guys remember this initial gap down in February, this was a big talking point for people that we finally got back up to this gap above. And so no different. If we just started to absolutely tank, which anything can happen. I don't think it's going to happen, but it could. It's been a weird couple weeks with COVID numbers, and who knows, maybe the market panics again. But it's just always important to be aware of these gaps. We have a gap here. We have a gap here. We have a gap here. We have, let's see, technically still an open gap here. So, there are gaps below to keep in mind for the bearish thesis. And that's another thing. If you're trading, you always want to be looking at both sides of the market. If you're just looking at the bull side, how are you going to, look at the markets with any type of just level head? If you're not looking at what the other side of the equation is looking at, you're never going to be able to put things into perspective. And so that's something that's really important as well. You can, and I'm bullish on the market right now, but that doesn't mean that I shouldn't be looking at what the bears are looking at to get an idea of what their perspective is, because they could easily be right just as much as I could. That's the beauty of the market, is no one knows what's going to happen. We just have an idea of what these levels are, whether they're gaps, whether they're anchored VWAPs, whether they're Bollinger bands below, or whether they're a moving average below. You always have to take the other side of the trade and at least have the perspective on what some of these other traders are looking at, whether they're bullish or bearish. So I guess the moral of the story is never get too caught up in your own analysis. Always be open to looking at other ways of viewing the markets. And even if it isn't the way that you're looking at the market, that's when you should really be paying attention, because if you don't have that perspective, you're not going to be ready for if your trade turns south and it goes the other way. So, hopefully we touched on the volume shelf enough. And I think the main thing, though, is looking at the volume shelf from that monthly side of things and being able to see, since we started this broadening formation, a majority of volume is holding at a much lower price. And that tells us that there are quite a few people holding at a profit right now. And that's always something to consider. So, Harneet, thank you so much for having me on. Sincerely enjoy every time that we have these charting sessions. And I hope this was valuable for your audience.
Definitely. It's actually every time we do the sessions, I get to learn so much. So really, it was a really eye-opening. And definitely today, the stocks and life part of it, I really enjoyed that conversation. So,
I think it's important, because there's been so many times in my life where, I've just got it made. I'm not saying right now, but there's been time, and I have a great life. I mean, I can't complain. So when you look at a trade and you make a bad trade, and then you make the whole trade just your overall attitude, that is a horrible way to go about life. You got to always count your blessings, know what you do have, and then making money is just a bonus. If you're happy with your life, you don't I know a lot of people that don't have a lot of money or have given most of their money away, and they are some of the happiest people I know.
Right.
My dad. My dad does not do a lot of stuff with money. He doesn't like money. He obviously knows you have to have money to live, but one of his biggest sayings to me when I was a kid was, money is the root of all evil. Money can make people do some really just bad things, shady things. They can really put people under the bus just to make a dollar.
Right.
So, money is great. If money can help you support family, or money can help you afford that house or whatever apartment that you want to buy, that's great. But don't let how much money you have control your happiness, because you will never be happy ever.
Right.
It's a fact. So, trading's great. Having a passion for trading is great, but having a passion for money, in my opinion, is not great. And that's what I'll leave it with today.
Perfect. Perfect. So thank you so much. Thank you so much once again for this part. And if need be, I'll again disturb you for another part because I just love talking with you. I just can't get enough of these.
Well, I can't wait to do our next video. This will give everybody some things to think about, and then in the next video we'll be able to catch up and see what's materialized, what hasn't materialized, and where we are in the markets when we do the next video.
Perfect. Perfect.
Hey, well, thank you so much,
All right.
Harneet. It's my pleasure. I really enjoy these. I hope everybody else enjoyed them as well. And everybody have a great day.
Thank you. Thank you so much. Bye bye.
See ya.